this video, we will dive deeper into understanding price action rules, and how to identify high probability setups. I cannot just frantically start looking for high probability setup. I need to take it step by step, and the very first step is to identify the market structure. So the structure we're looking at is clearly a bullish trend series of high lows and high highs. The supportive indicator, the 5-hour exponential moving average, keeps pointing up. So the step 2 is to locate the correct channel, because these candles are never alone and naked on a chart without a pattern. There's a reason to price movement, and I want to follow the directional bias of the market correctly, and I want to know where the key entry points are. So I'm going to take a look at the beginning of the uptrend, and I can already see geometric formations, so many high lows. There is a lot of ways I'm going to draw the channel. I can either select the lowest swing, something like this, or I can draw it, let's say, a little bit like this. I'm going to select this channel for right now. Let's see how does it fit at the top, and it fits fairly well. So the market is in bullish trend. I'm following trendline rule and high probability setup rule, which means I'm not thinking about selling. I'm not buying far from the key entry point. I want to see a price action pull back to the EMA or the trend line in the form of a high probability setup, and also I respect the short-term corrections. I'm using counting technique to count the high probability setup, which means if I'm trading a bullish trend, I'm going to select the latest highest high. This is where I'm going to reset the count, push up, the high was exceeded. I need to reset the count. New high, first entry long, second entry long, new high exceeded, count reset, first entry long, pull back, and we have second entry long at the key entry point. Problem is we have a short-term downtrend working lower. Now I can draw a little bit tighter with the small break in new extreme, but it is quite ambiguous. And once it is ambiguous, I'm generally a little bit more patient. Let's see what's going to happen. And EMA keeps holding again, once, twice, and we have high-low confirmation setup. If something is wrong with the second entry long, I can take the high-low, and this is first great high probability setup for the day, because think about how many sellers must have sold selling directly into EMA while the trend is bullish. So you can use these sellers, take the other side of their orders, and capitalize on this little trap. And this is where the correction phase will end and the brand new push phase will begin. So as a price action trader, always establish the structure, the key entry point, wait for the pullback, the key entry point, and this is where the strong push phase may begin. And if you're holding the runner, you're trailing it below each significant swing. In this case, you're not leaving money on the table and you're locking in your profits. So right now, I'm not buying far from the EMA. I'm just waiting for the pullback to the key entry point. Patiently waiting, not really worried about anything. First entry long, and EMA is not holding. And this is concerning because notice EMA held here, and we are slicing through. I'm going to redraw a little bit wider downtrend because this correction is a little bit stronger. So if I'm thinking about buying, I want to see push above EMA and high low or filled second entry short. Trend line is holding. I'm still thinking we may get new high, filled second entry short above EMA, but I have quickly proven otherwise, and the bottom completely dropped. So I need to zoom back and reassess what happened. If I'm going to use the Fibonacci tool just to measure the retracement, you can see we retraced over 50%. If I'm going to analyze the retracement, you can see how strong and steep this push down is. Very little pullbacks in between, and this tells me that this looks more like a reversal because it is so sharp. So what I'm going to do, I'm going to go back because market is telling me that clearly we are reversing, we are entering a bearish trend. So I'm just going to adapt to the market in hindsight. I believe the right channel was a little bit like this, break in new extreme. It doesn't matter because while you're watching this live, you still get the chance to capitalize on this. And by the way, the second entry long was still fairly good setup, not that bad, just a little bit more advanced and more aggressive, but good two high probability setups at the start. We have a break, new high. So right now I'm going to do the same thing, but to the downside. We are trading a bearish trend, so I need to locate the channel. I'm going to select the first swings at the top. You can see geometric formation, I'm going to copy, put it at the bottom, and I'm going to reset the count from lows. I'm resetting the count from highs, counting for second entry long. So this is where I'm going to reset the count. Lowest low of this push down, the correction is starting, and I'm looking for a second entry short at the key entry point. We have a new low, first entry short. We have second entry short at two key entry points, not one but two, EMA and the trend line, which gives you more confidence that you're reading it correctly. Problem is, the second entry short triggered below bullish bar. I cannot sell below bull bar. If I like the setup, I can wait for follow-up bar and see if it's going to be bearish. If there's a tick below this bar, I can use limit order, drop it a little bit higher, but my stop loss always has to go below the initial signal bar, the highest swing. I'm going to mark it. I like this setup. I tried to enter this, but I had my limit order way too deep. Why? Because the stop loss, you can see, was way too big, 4 points. I don't want to risk this, but it never came back. It worked higher, then it broke and basically plummeted lower. But you can see once again, look at the geometric formation, identify key entry point, wait for two-legged pullback, and this is where the smart sellers will sell. Price action is breaking the channel. Is my bearish thinking over? No. Because trendline rule says we expect new low to be tested after break. We're not expecting reversal just yet. We're following trendline rule. So I would like to see this uptrend playing out, which we have break and the new extreme, and we have second entry short. But problem is, this second entry short is still mainly above EMA, and it's a little bit sideways. You can see I wanted to see breakout pullback lower high. For this reason, this is only marked as more aggressive because it is above EMA, a little bit stacked, but you need to get new low and uptrend played out. Can you get lower high? We cannot, and we created the new extreme, so that's okay. Market created new low. So as we are reversing above the EMA, what I'm going to do, I'm not going to argue with the market, simply going to adapt. We need to draw a brand new channel. We only had first entry long. This push up is so significant. I was even looking for possible wider channel, something like this, but even the wider channel has a break and the new extreme, basically double top, which is very close to creating new high. Bulls may consider this as new high. So I'm resetting the count, and because EMA is not holding, I'm basically treating this as a break and new extreme. And right now we're pushing below EMA. We're testing the EMA from the other side as resistance. And we have failed second entry long. But failed second entry long, new high, first entry long, second entry long, failed reversal, form below bullish bar. I cannot sell below bull bar. So it makes sense to expect reversal. Problem is, I cannot sell below bull bar. Can we get some better setup? We cannot, because by the time the bull bar entry finishes, it basically reached a scalp. So I just have to sit here and wait. I'm going to draw this channel, but we have overshoot. You can see spike down, far from the EMA, breaking the trend channel line. So overshoot can lead to break of a channel or reversal. Okay, I expect stronger bullish momentum in the opposite direction. So if there's going to be the first second entry short, I will skip it. Now we're not even at the EMA, so I'm definitely not selling. I was looking for some double trap, visual to like a pullback, but as I can see, we're pushing above EMA. I need to pause because we have overshoot. So I want to see push below EMA, lower high or failed second entry long. And this is not happening, and market continues working higher. So the structure is clearly telling me that the overshoot is resulting in reversal scenario. We retrace too much of this downtrend, and because right now, what is the bias in the market? Ask yourself. You always want to have an idea what is the big picture. We are starting to go into consolidation. EMA is flattening, and we have a lot of smaller trends. Okay, at the start we had big uptrend, big downtrend, and now we have push down, push up, push down, push up. So we are starting to enter consolidation, which means if the retracement is too deep, I'm just going to adapt, and the channels are most likely tighter. So once we are entering a consolidation, I'm quick to adapt to brand new market structure. I'm going to redraw uptrend like this. Okay. We have second entry long with small support adding confirmation and confluence to bullish momentum. Now, when I was watching this, I was hoping we would get high low above EMA. That's what I was looking for, because we're mainly forming below EMA. I can mark it more aggressive. Can we get high low above EMA? The support is holding. I'm following the trend line rule, okay? This is what I'm looking to go long. Overshoot, started a brand new uptrend. Second entry long, we need new high. Can we get high low? We have high low here. Another bounce of the support, but the signal bar is bearish and double bar entry is simply completely gigantic. I cannot take it. So even though we had the right idea, we couldn't have really entered. Break a new extreme. I'm pausing looking to go long after break new high, but because EMA keeps holding and I can see so many smaller legs continuing, this is a lot of times a sign there is a bigger pattern. So because I'm objective, I'm not going to break the rules. I'm following the rules every single time. This way my odds are on my side. If I can see EMA rejecting after new high and so many pushes to new extreme, this means a lot of times there's a bigger channel. So what I'm going to do, I'm going to play the bullish channel. I cannot go long as long as this downtrend is in play. Always standard stuff. I keep drawing the channels. So my thinking process is break new low, push above EMA, fell second entry short into new extreme. Okay, we have a break new low. Can we push above EMA? And we cannot, and I basically have to adapt once again. The structure is too rangy as we established. This channel is not coming into play. This was just prolonged bullish momentum. Downtrend played out with the break and the new extreme. You can see how choppy the structure is starting to be. So you gotta be really careful. You can't argue with the market. We continue to work higher. I'm gonna redraw a brand new uptrend. So what are you expecting right now? In a trend range like this, I'm just following the channels, following the trend line rule. If I'm not sure, I'm definitely not picking tops and bottoms because this trend range doesn't have static key levels. Okay, once again, I'm gonna zoom back. You can see higher lows, a little bit higher highs, but still way too rangy. There are no static highs and lows for me to pick top or bottom. So when I'm trading a structure like this, I like to see established downtrend and a second entry short, or established uptrend and a second entry long. So right now I have established uptrend, so I'm expecting the same thing as happened right here. That's the easiest way how to navigate structure like this without overcomplicating it too much. So I want to see second entry long because this uptrend is new high. Can I get two-legged pullback? I cannot. I was looking for something like this, second entry long, which of course we didn't get. Okay, I'm not breaking the rules. We have a break in extreme. I'm pausing looking to go long. I cannot sell because we're above EMA. I will need to see if it's second entry long below EMA. That's not happening. Price action is starting to enter small consolidation and market is eventually reversing all the way down. What I'm going to do, I'm going to zoom back because I want to see what structure I am trading. This is clearly a trend range. I can see some reaction here, so I'm going to use these lows as a possible bottom of the trend range for the key level. I'm going to copy and put it at the top. So this is my main picture, the big picture. So I know I'm not lost. I can expect possible bounce. At the same time, I want to follow the trend line rule. So I'm going to redraw the shortened downtrend like this. And I expect retest of this downtrend. So I want to see second entry short at the EMA. We have new low, first entry short. There's a second entry short which is horrible, far from the EMA. I cannot sell below bullish bar. The uptrend needs to get new high, far from the EMA. I'm just waiting. Possible double trap, can we get it? We cannot, and market continues working higher. The range is kicking in, so I'm gonna adapt. Once again, we are reversing the trend. Switch gears. We have a second entry long, but far away from the EMA, not even tail is touching it, let alone the body. I'm waiting. Okay, I can see we have small support and EMA keeps holding. So what's going through my mind? I would like to see